Let's talk with Paul Bosley, founder of Business Finance Depot, which offers financing services for fitness, franchisees, and RV parks and campgrounds. I'm Alex Burkett, and this is the Outdoor Alliances podcast. In today's episode, we'll talk with Paul about SBA loans, equipment leases, and his take on the state of the camping industry. Paul, thanks for being here.
Oh, my pleasure. Look forward to it.
Paul, can you just give everyone a little bit of a background of how you founded and started Business Finance Depot and how you got into the camping industry?
That could be a long answer.
Let's try and condense it down as short as we can.
All right. I was introduced to the franchise industry about 8 years ago. I've been in the fitness industry, believe it or not, for 48 years. So one thing led to the next. I ended up going to a very large franchise show, and they asked me to start being a speaker at that series of shows. And I'm in Denver speaking at a franchise show, and I was introduced to the gentleman that runs franchise financing or franchise sales, for Yogi Bear's Yellowstone Parks. They had just decided that they wanted to change lenders. I was speaker at the show. They interviewed me over a period of months. They selected me to be the financing source for the franchise. And that led me to being asked to be the finance instructor for ARVC's national school, which I accepted about 4 years ago. And I've been the finance instructor for ARV's national school now for 4 years. We started to market with ARVC, going to their shows, speaking at their shows. I've spoke at the show now a couple of years in a row. And we're now very active in the financing space for the RV park industry.
And Paul, what was your background as far as finance goes? I mean, I know you said you've been in the fitness space. I mean, what interested you in getting into finance servicing?
Well, I owned a large chain of health clubs and I sold them. I wanted to stay in the industry because I love fitness. I still work out 6 days a week, and I'm 70 years old, got a gym in the house and a sauna in the house. So I'm a fitness guy. There's no doubt about it. Always will be. And I decided to go back to school. I had a baccalaureate in believe it or not, I have a baccalaureate in the RV industry. And when you're in college, you got health science and recreation and parks is the undergrad degree. So I've got an undergrad degree in recreation and parks. I've always wanted to, this is going back to when I was 20 years old, half a century ago. I've always wanted to work in the parks. I mean, that's something I've just always wanted to do. So I went back to school. I did because I had a baccalaureate. I didn't have to get a baccalaureate again. I just needed to get classes in accounting. So I went through all the accounting classes at the undergrad degree. And I went on to work on the master's program in accounting for business valuation. And the reasoning behind it was all my clients are privately companies. When business company is you're working off of a stock, stocks that are published. But when you're a private company, it's very different. And I studied that in the master's program at FAU. And I've been in the finance industry ever since.
Paul, can you talk a little bit about maybe some of the services that you offer now, if people don't really know what those look like, and then we can sort of go into each one of those and dive more specifically into those services.
Well, we've tried to analyze every possible way of financing a business, and there are many. Now, with RV parks, they're more limited because the dollar amounts are larger. Because we also work, for instance, as I said, in the franchise space, and there's a lot of franchises out there that you can open up a franchise for 100,000 or 150,000, but you cannot open up an RV park for 100.
Right, not with the land, the construction, everything that goes into it.
Right. So it's a lot more limited only because the dollar amounts are much larger. So the primary three things that the products that we offer. One is equipment financing. The second is SBA loans. And the third is USDA loans. So with equipment financing, you have a park owner that just wants to finance park model cabins, glamping structures, golf carts, IT equipment, landscaping equipment. And we can do that, and they don't have to refinance their mortgage because the collateral for those transactions are just the equipment itself. The second type is an SBA loan. Now, SBA loans are government-backed loans. The SBA stands for Small Business Administration. They back 70% of the loan. So, and they cap at $5 million. So any given person can't get more than $5 million worth of government-backed SBA loans. The third type is a USDA loan. That stands for U.S. Department of Agriculture. They back 70% of the loan. They have to be located in remote areas that are USDA approved. So you're not going to get a USDA loan if you're opening up a campground, for instance, in a close to a major city. But the majority of campground owners are not located near major cities. They're more located near national parks or lakes or something like that. So most campground owners are located in USDA approved areas. And those loans go up to $25 million. And you can do one on this week and you can do another one next week. So there's no cap, because the idea behind the USDA is to help develop rural areas. So the majority of the loans that we do for people that either want to buy a campground or people that want to build a campground, if they're over $1 million, we usually offer USDA loans. We're under contract as an agent with a number of USDA national lenders. And if the loans are under $1 million, or they're not located in a USDA approved area, we package SBA loans, and we're under contract with about, I'd say, 5 different national SBA lenders that like campground financing.
And Paul, I know we have sort of talked off air a little bit before. There's sort of a process to getting an SBA loan. Can you sort of explain that, maybe for people who don't understand, what the types of things that need to go into that, and then maybe some of the hurdles they need to cross in order to get financing?
Well, it depends on whether you're buying an existing campground or whether you're launching one. There's certain commonalities to both processes. However, when you're buying one, there's additional information that you need. So the process includes finding an SBA lender that likes this type of industry. I mean, there are SBA lenders that don't do loans over $350,000, and they don't put that sign on their front door. And there are SBA lenders that really don't want to do construction, and they don't put that on their front door. So you have to find one that, if that really does like doing SBA loans, and they like the industry, and there's some SBA lenders that are what's called PLP lenders, preferred lending partners of the SBA, which means that when they approve it, it's automatically approved. And there's other SBA lenders that are not PLP lenders, which means that once they approve the loan, it has to be sent to the SBA in Washington, D.C. for the SBA to approve the loan separately. And they don't put that on the front door. So when you're shopping for SBA lenders or USDA lenders, there's some questions that you have to ask to try to figure out whether or not they are interested in this kind of business and what kind of lender they are. And then in the case of the USDA, there's some USDA lenders out there that only do maybe 1 or 2 a year. And there's others that we have under contract with that they're in the top 5 USDA lenders from a volume standpoint. So the the process of finding the lender is probably the most important part of this whole thing. Just like, if you think about it, when you're going to buy anything, you're going to want to try to find what's the most appropriate fit, whether it's the location or the lender, things like that. So the biggest hurdle, I think anyhow, is finding the right lender. And that's what we've kind of flushed all that out as a company. That's why we're an agent of these lenders. I know which lenders like what, and it's almost like matchmaking. We're like a match.com for buyers and funding sources is really probably the simple way of explaining our services, but we know a lot more about the process than just that. But that's really the big thing, because we talk to a lot of people that are bank shopping, and the local bank either is not interested or the terms that they have are maybe not desirable. The process itself involves you compiling all of your personal financial information, a business plan, and financial projections, which are included within any business plan. Your personal information includes tax returns, personal tax returns. If you own an affiliate company or other companies that you own, the tax returns for the other companies. Your credit report, you sign an agreement to let them pull your credit, but initially you can just send your credit report, which has a credit score on it. Your bio is incredibly important. What have you done to learn the industry that you're trying to get $1 million or $2 million or $500,000 from the lender to say yes? Kind of like what you asked me the question, why did you get into financing? Well, they're asking you the question, why are you asking me for $1 million to finance an RV park? What have you done to learn the RV park?
And it feels like, Paul, sometimes they're looking for every reason to say no almost, and you've got to prove to them that, yes, indeed, we are qualified, and you're going to help people get the plan together and move it across the finish line.
That's right. That's right. Well, underwriters by design and credit committees by design are there to pick apart your application and to make sure that they're comfortable with it, because their job is to separate, I guess, use a biblical thing, the chaff from the wheat, and really try to determine which ones should be approved, because their name is on the approval. And that's, if that loan goes bad, their name's on that loan that went bad, so they're careful to make sure they approve it. And to some extent, that's the same thing that we do. We're under a situation where if somebody were to send me information and they had, let's just say, a 585 credit score, and if I submitted that loan to a lender, I would lose whatever credibility I've ever built up, even over the years. I mean, we're supposed to do the same thing on our end to help people to package that loan so they put themselves in the best light. So I tell people to, on your bio, maybe take the ARVC POW, the Prospective Owners Workshop, put that on your bio. The fact that some people say, well, I've got an RV and I love camping. I said, well, that's great. I love to eat, but that doesn't mean I should own a restaurant.
Right.
What have you done to learn the business end of it? You maybe as a consumer, you understand it, but that doesn't mean you understand how to run the part of the business. So that's the business plan, the financial projections, all those things are the things that, along with your personal information, that you have to provide. And like I said, your bio, and you think about your credit score and your bio are the two things that reflect who you are, or who your partners are. And those are probably the most important things. Now, totally separate from that, if you're buying a park, in addition to what I've just said, you have to get the tax returns, and you got to get the letter of intent to purchase the property, the agreement that you made with the seller. And then the underwriter is going to see if there's enough profit in this business to be able for you as the borrower to pay the loan back. And if there's not, then you better have a pretty good reason why they should say yes, and what you're going to do to improve the performance of that park.
So that sounds like it's sort of a different animal entirely. Paul, can you maybe we'll take it one step further and say, hey, if I have, hypothetically, I'm someone who's coming into you and says, I want to start an RV park and need help securing that financing. Can you walk me through step by step from first conversation to you until close, what that looks like? I mean, I know we just talked some about the overall process, but just to give prospective clients or customers of yours an idea of what they can expect working with you.
I think probably the easiest way to answer that is I'll just kind of do major steps.
Yep. I think that would be helpful to a lot of people, maybe trying to look at that timeline.
Yeah, there's baby steps in between the major steps, but the major steps are the first time we talk, I send them a lot of information to review about the loan process that they're going to go through. So the first step is for them to get kind of a good overall education of the process. The second step is for them to compile all the information I need to do a pre-qualification on my end. So they get an email from me if they say they want to go forward. It's got all the things that are necessary. And then I look at it, I review it, and compile it. So actually, right after this interview, I'm compiling a SBA loan application for a franchise. It's not a campground, but I'm going through all their files, looking at all their tax returns and everything they submitted, just making sure everything's there that needs to be there, and make sure that it's qualified. Like I said, if I see somebody with a 580 credit score, it's dead in the water. So I look at everything. If they need to put a certain amount of money down on a loan they're trying to get, they don't have it on their personal financial statement. I got to figure out where you're getting a loan from. Are you trying to rob a local bank? Are you getting some kind of a gift letter from a parent or somebody? Are you going to bring in partners? I mean, so we have to go through all that information to make sure it's qualified. Then the next step is it gets submitted to a lender for whichever product that we're submitting the loan for. And it could be a $250,000 equipment finance agreement for 5 park model cabins. It could be a $10 million USDA loan. It could be a $3 million SBA loan. Either way, it gets submitted to a lender. Lender reviews it, asks questions directly to the borrower. Sometimes they'll ask me questions, but the majority of times they'll go right to the borrower, because we're in a high volume situation. I mean, right now we've got over $90 million of approvals. So we work in more of a volume situation. We work on a regular basis with the lenders. So they'll usually go right past me to the borrower and just ask whatever handful of questions they've got and copy me on the questions. Once the questions are answered, they're going to get either declined for pre-qualification or they're going to get pre-qualified. Worst case scenario, they get declined. We try to figure out why they get declined. We're kind of huddling up with the buyer and the borrower and try to figure out what we got to do to correct the situation. Once it's corrected, we can resubmit either to the same lender or go to a different lender. Like I said, we're under contract with different lenders. And there are a number of times where we get people approved at another lender that they got declined at the first one. So it's not unusual for that to happen. In the best case, they get pre-qualified. We set up a call. I've had 4 of them today with different borrowers. We're introduced under their reviewing the letter pre-qualification, the term sheet. There's a lot of different names for it, but the reality is once they review it, then it's up to the borrower to decide if they want to accept it. If they accept it, they sign the agreement and they send it back. And now they're moving to the next step. The next step would be, now they're dealing directly with the lender. The lender is going to give them any final information they need. Like it could be construction contracts. It could be, additional information about whatever they're trying to buy, like park model cabins or whatever. It could be, additional information that was kind of missing from the application that they want to get clarity on. If a person's going to keep their job, as an example, or if they're going to move or sell their house or whatever. So once they once they get all those things ironed out, the loan application goes into the underwriting committee. Normally there's a committee if it's over $1 million. Normally it's an underwriter if it's under $1 million. They either going to approve it or decline it. Most loan applications that go into underwriting that have been pre-qualified get approved. The vast majority get approved. They don't all get approved because some things come up. Between the time that a person, for instance, has started the process and now they're in underwriting, it could be 4 months, it could be 6 months, it could be 2 months, it could be a year. I mean, depending on how much things they have to do to get between point A and point B, if things change, there's a possibility that they get declined in underwriting. But the majority of them get approved. Once they get approved, they get a commitment letter. If they get declined again, we try to figure out what we got to do to fix it. And we try to fix it and either go back to the same underwriting committee or we go to a different lender, one or the other. If they get a commitment letter and they sign it, now they're under contract with the lender. If it's a business acquisition and there's no construction, it's a relatively quick process. If it's a business acquisition with construction or if it's a startup, then now they're funding the construction. And the process takes as long as the construction takes until they're open. Because they're paying for the construction. They have to approve the builder. The builder's got to have bonds. It can't be your third cousin that's going to be doing the construction. It's got to be an approved builder that can get bonded to do this kind of work. Once the loan closes, you get working capital usually is included within the loan. And they start repaying the loan and they're open for business. So that the main steps are the understanding the process, applying and getting pre-qualified, getting more information and getting a commitment letter, completing everything that's got to be done, including the construction, then there's a loan closing. Those are your main steps.
I think that's really helpful, Paul. We'll switch gears slightly and talk about maybe one question that's on, a lot of people's minds right now of how interest rates are affecting, your industry and how things are going in financing and where you sort of see the overall health of the camping industry moving forward. I know there's a lot of talks about growth. There's still a lot of people, even through all of this stuff with the interest rates, building and growing and expanding. But I just wanted to get, your thoughts on what the health of the industry looks like right now.
The loan amounts are large. So when interest rates change and the loan amounts are large, the payment amounts increase significantly. Even though they're 25-year fully amortized loans or 30-year fully amortized loans in the case of USDA, it still has a big impact. So the impact is the higher the interest rates go, the less wiggle room any given campground application has. So there have been situations where people were pre-qualified and now it's not working out anymore because the interest rates have changed so significantly that whatever wiggle room was there when the interest rates were 6 it's not there anymore at 9 3/4. So it has had obviously a negative impact, but not on all projects, because in some cases the borrowers are strong financially and there's significantly more wiggle room to be able to absorb the increase in interest rates. As far as the way I see this, I mean, I read the Wall Street Journal every day, and they project interest rates all the time. It's expected that we're kind of toward the end of we're toward the top now. It's probably going to go, if it didn't already go, to 10 1/4, which is what it's normally prime plus 2.75 is the cap that they can put in for a risk premium. Right now, prime is at 7. If they raise it, it's at 7.5. The risk premium can't be more than 2.75. So the highest it could possibly be for a loan amount right now is 10 1/4 if it went up 0.5 point, which I think it probably did, or it will. Not did, but it will. And it'll probably go up again until they get inflation knocked out. So what I tell clients is it's probably going to get up, can't get any higher than 11. And all of a sudden we're going to be in a slowdown period, a recession, and they're going to try to stimulate the economy by dropping the rates. So the rates are going to head back down towards 6. And obviously when the rates head down, then the payments go down, and and obviously people have more profit. As far as the way I see the industry, it's a hot industry. Lenders that we work with, and there's again probably 6 SBA and 2 USDA lenders, so we're talking 8 national lenders that we work with. They love the industry. So like today, I just saw an email came across as a pre-qualification for a purchase where they'll finance up to $1.2 million. So now it's just a matter of whether the borrower can come up with the extra 300 or whatever thousand that's going to be needed. That's based on an increased interest rate. It used to be $1.3 million. So, now the borrower's got to come up with more money. I think that personally, I'm an Airstream owner. I told you I studied in Campground, in college, so I'm a little bit subjective, but not a little bit, I'm a lot subjective. But I think the industry is just going to continue to grow.
And so speaking of that, Paul, I mean, what are some of the trends that you're seeing or talking with potential, customers or clients as far as units are concerned, what types of parks people are building? I mean, you're sort of getting a front line on some of these new park builds or what people are looking to do with construction. Can you share maybe just some overall trends that you're seeing and where people are going?
Where we're getting the most play right now in a business is in 2 areas. We're getting a lot of existing people that are trying to finance the park model cabins and the glamping structures to improve what they have. We've got a real good company to do that with. We've lucky to have them. We've been with them now for a while, and the guy that we work with does a good job. So we get a lot of that. I was at the glamping show, talked to all the manufacturers. They know we're out there. There's very few people, if anybody, that are really out there talking about how we can finance these structures, because you have a lot of existing people that are trying to open up to the glamping community. I mean, the last page of Woodall's magazine last month was all about KOA's report that a lot of people that are now are into glamping, and it's they want to bring their families there. They're the younger, the millennials, and they're trying to stay in glamping structures and, in nice park model cabins for their vacations and bring their kids. So we see a lot of that. It just so happens because we help with the financing of KOA's business, sales, the existing parks, that we do a lot of that kind of work. So we're doing a lot of biz act types of thing. People are aware that we're under contract with a lot of different lending sources. So we tend to get a lot of people trying to buy a park, people that are into the industry. And for new build, really it's been mostly either Yogi Bear's Jellystone parks, or now and then, somebody from Arvik will send somebody over that's trying to get financing to build a park. But most of the ones, the way I'm sizing this industry up right now is big money's coming into this industry, and they don't need financing. But I guess the way I'm looking at it from our perspective is we're dealing with more the mom and the pops and the smaller business owners that are either trying to improve their park or launch a new one or buy a park, that maybe the big guys haven't really tried to buy yet. So that's what we're seeing. I don't know if that's a good answer to your question or not, but that's the experience we're having.
Yeah, I think it is. And I think a lot of people are seeing those similar, reactions that you are of new players entering the space. But I think there very much is a place for the mom and pop business. And I mean, that's who we primarily work with on the marketing services side. So I think there's very much a space for that. And it's still a very dominant in large part of the industry, even if things continue to change.
Yeah, I've been in fitness, and that changed. There's like went from mom and pops really to big companies and big franchises. And there's still a lot of mom and pops out there. I mean, I don't think this is the big boys aren't looking for little markets, so it kind of reminds me of what happened in fitness because I lived through it. The big boys came into fitness and they wanted all the big cities, but there's a whole lot of America out there that aren't in big cities. And I think it's the same type of thing in this industry. The big guys, they want to be next to maybe the Yellowstone National Parks and the places where there's going to be a lot of traffic, but there's a lot of places in this country that there's not going to be a lot of traffic because the average person statistically that camps, they go usually within 150 miles of where they live. And there's a whole lot of America that isn't anywhere near any major national parks or state parks, so there's a lot of opportunities still out there, I think, for mom and pops.
Paul, can you give sort of maybe some final thoughts and then some contact information if people do want to reach out and follow up and begin a conversation with you?
I no, I can't. Overall, I think you've done a nice job asking me a lot of good questions. I mean, my contact information, I'm a SCORE counselor, which is Service Corps of Retired Executives, which is part of the SBA. So I'm a volunteer counselor. I've been a volunteer counselor for the federal government now for 10 years. I'm happy to answer any questions anybody has. All they got to do is email me at paul@businessfinancedepot.com. Depot spelled like Home Depot, DEPOT. So it's just paul@businessfinancedepot.com. Our website's Business Finance Depot. If people want to register for our newsletter, they can register there. And if they have any questions, feel free to email me. I'm happy to answer the questions.
Paul, thanks for taking the time and coming on. I really appreciate having you on the show.
My pleasure. Thanks for having me, Alex.
Thanks for listening to the Outdoor Alliances podcast. Subscribe for more guest conversations and weekly marketing episodes every Monday and Friday, wherever you listen to podcasts. And we'll talk to you soon.